Individual investors are back to being bullish on stocks this month, now more confident than they've been all year that markets will continue to rise. That is according to Investopedia's latest investor sentiment survey. For more, let's welcome Fast Money friend and Investopedia editor-in-chief, Caleb Silver. Caleb, great to see you.
Great to be here.
This seems like quite a turn from the last time we had you on, which is just, what, a month ago or so?
Absolutely.
And investors were really cautious.
Yeah, 6 weeks ago, big sentiment shift here, and a little rodeo going on here. Cue Garth Brooks, because individual investors are back. About a quarter think the market's going to be up 5% or more by the end of the year. Back when I was here in early May, that was only about 13%. We have only about 18% expecting the market to trade lower by the end of the year. So a lot of bullishness here, and the lowest level of pessimism we've seen all year. Very fascinating.
My favorite question always from the survey is, what would you do with $10,000? Last time it was CDs, I think. And this time it's stocks.
And by the way, after he answers, I want to hear how you'd answer that question.
$10,000?
Yeah, I mean,
I'm risk averse, but anyway.
Yeah, we love asking that question because our readers love asking us that question. We even put out a magazine to reflect that. It's on newsstands now because it's one of the most popular questions we get on Investopedia. So what are they saying? Individual stocks. And that's where they usually are. These are individual investors who love putting money to work. They love setting up their portfolios. They haven't been able to do that, they felt, in a long time. So stocks on top. CDs still in the top three, but the fact that they're back to stocks is a bullish sign. ETFs are on that list as well.
Traditionally, this, the people who respond to your survey, they like the bread and butter sort of stocks, like the big cap techs. Does that still hold, or have things changed? Absolutely.
They love the home cooking. They love mega caps, even though they feel they're a little bit bubbly right now. But if you look at the top 10, looks an awful lot like the S&P 500. You got your Apples, of course. You got your Microsofts. We do have NVIDIA back in that list this round, of course. But they like big home cooking.
We're doing a lot of going down memory lane. So where's the beef was a commercial back in. Where's the bubble? Because I know you asked that question as well.
Yeah, we asked that question, and they think it's in AI-related stocks. Who was talking about that earlier? I think it was you earlier on in the show. AI stocks, related stocks, 55% chose that as the most bubblicious of the assets right now, followed by mega cap tech, about half the people saying that. Housing stocks, as we know, housing stocks have been on a tear, even though the housing market has been asleep for a while. They think that's a little bit bubbly. And then internet and comms, your Metas, and your Alphabets, of course.
It's interesting because there's a little overlap there between AI-related stocks and big cap tech, right? So
there is now.
You must really think that there's a bubble going on there. In terms of their concerns, it seems like there's a big cluster. There are a lot of worries still, though, out there amongst the retail investors.
Yeah, but the level of worry has really come down a lot in the last 6 weeks. Usually when we survey this over the last 6 months, the concerns have been 80% inflation. Now it's just 61% choosing inflation, recession, U.S.-China relations. That's moved up from about 6 to the number 3 concern right now. Of course, the bank issues are behind us. That may have a lot to do with it. Inflation subsiding a little bit. High interest rates definitely on their mind, but not a huge concern. And then Russia, Ukraine. But a lot of the things that were there are no longer there.